Welcome back to Trades and Trends. I'm your host, Kyle. What do you even do when you have all these phones and iPods and iPhones and Samsungs? And I've got so many. I've got like 11 different devices here. I don't even know what to do with them. Some of them I think I should just hold on to because they're relics and maybe someday they'd be worth something. I don't know. Like, you got an original old iPod video here with the scroll wheel and the hard drive and the 160 gigabyte. I don't even know. I'm pretty sure this is a first gen iPhone 1. iPhone 8 gigabyte. Yeah, anyways, sometimes I think I'm just not sure if I want to get rid of them yet, but then they just sit around on a shelf for a decade. Anyways, so looking at the markets again today, even though that we are bullish, I say we as followers and my viewers, and I should probably say even though I'm bullish on where the market should be heading, or where I think the market should be heading, and where I think the market is heading, that doesn't mean that there's not going to be days of downtime. And that doesn't mean that there's not going to be pullbacks and sell-offs and so on and so forth on the way up. In fact, that's entirely natural. That's all a part of the process. We just have to accept that. So when I make bullish comments about where I think the market is going, of course, that's not me suggesting that it's just going to go up and up and up every single day, 100 points over and over. That's not how it happens. That's just not how it happens. So there are going to be down days with the up days. I don't think I have to remind anybody here, I'm not a licensed financial anything. I'm not your financial advisor. I'm not here to give you stock advice. I'm not here to tell you what to buy or sell. I'm just sharing my opinion based off my experience on where I think the market's going. And I'm sharing you my perspective and my opinion of what the Federal Reserve is doing and the policies and the effects that those are going to have. So that's all I'm doing here. Now, obviously, I also have I have good intentions. I don't want to give anybody my bias or an opinion or a perspective that I think they might misconstrue and inappropriately act on and potentially lose money on. That's not my goal at all here. My goal is to share this information for hopefully the benefit of my viewers, but then also to learn some things from my viewers, some different perspectives, maybe some of their own opinions and their biases, and then we can discuss it. We grow by having conversations and by exploring different ideas. I'm not selling any subscription service. I'm not even selling you ads. I'm not selling you sponsors. I'm not selling you anything. You can take from this channel whatever you want and you can leave the rest. That's perfectly okay. Now, that being said, Monday we had really good market action. Monday we were breaking all-time highs across the board. Here comes Tuesday. Tuesday, S&P 500 sold off over 1%. ASML came out with really bad earnings and guided lower. They actually accidentally posted their earnings report to their website a day early. It's amazing how these larger companies mess up some really small, finer detail like that. They revealed that demand for their machines has not quite recovered fully to the pre-COVID level and where they expected it to be by now, but some of that fear, some of that information that has now come out is being spilled on over into NVIDIA and Intel and AMD and these chip manufacturing companies. But they already have the hardware, they're already making their chips, they're already producing at scale. I don't think the problem is that anybody is being shorted hardware to be able to produce however much they're trying to produce. I think everybody who's already producing at scale already has the equipment to continue to produce at scale. And we'll see that when NVIDIA reports whether or not they end up breaking records again and they detail their inventory numbers and their sales and all that stuff along with the other chip manufacturers. We'll see all that info in the coming weeks. But markets sure weren't bothered by it again today. Now we're Wednesday, halfway through the week. The terrible Tuesday is marked off the list, and most of the indexes have gone back to make all new all-time highs again. The S&P 500 is still just a half of a percentage point shy, but it did recover some of that ground that it lost on Tuesday today by about 40 points from the lows. So it's looking positive. Now, that's not to say that it couldn't roll back on down lower. So, and if it does, then we will evaluate that then. But that doesn't change the larger perspective of markets are going up. We are trending up daily, weekly, monthly. We're going up. So unless we get some serious fundamental change, either from the Fed or from economic data, and we continue to get good earnings from companies, then there's no reason that we wouldn't continue to slide on upwards. But of course, there will be down days mixed in with that. That's all just part of the natural ebb and flow. Now, something a little bit more finance news, not so much stock and market news. The FTC has released updated rulings on your ability to basically cancel subscriptions. And they have come up with a new rule called the Click-to-Cancel. And that is stating that basically you as a customer, you as a subscriber, have to have the ability to be able to cancel a subscription service just as easily as you signed up for it, which is great. So think of all those hard to cancel services, whether it's, I hope it goes so far as to apply for things like internet subscription services and insurance subscription services and things as simple as streaming, of course, and cell phone plans and anything that you pay a monthly subscription fee a part of. I would think that this is going to take effect towards. So supposedly in the next 180 days or so is when businesses are really supposed to be abiding by this new rule. And I think this is only a huge win for consumers, because we know that these companies, some of them are a little bit worse than the others, but we know that these companies really pride themselves on making it as difficult as possible, as annoying, as frustrating, as difficult as possible for you to cancel your service. That way they can just keep you locked in, get you to the point where you just say, I'll deal with this tomorrow, and then tomorrow comes and you've already forgotten about it, and they continue just running your credit card. Internet companies definitely come to mind. I know if I want to try to cancel my service with Comcast, it is like pulling teeth. You can't just go through your account online. Suddenly none of the options in your account work anymore, and now you got to call customer service. Well, you go to call customer service, you're waiting 30, 40, 50 minutes in a call queue because they don't have any agents available to take your call. And this is all just a game that they play. It's all completely legal for them, or at least it was, not so much going forward, to be able to just stall and get you annoyed to the point to where you hang up the phone and you think, well, I'll try again another time. And then another 6 months go by and they've made even more money. So we will see how these practices evolve in the coming future based on this new ruling. So super exciting though. It's a big W for consumers, and I love to see it. That's all I have for today. Thank you all so much for watching. Please remember, it's about time in the market, not about timing the market. Please stay tuned. I will have another video out very soon.